This week, Tesla's stock price takes a dive, a portfolio update, and I try to make the case for investing in Tesla for the next 5 years. Stick around. First, let's take a look at a portfolio update. This is a portfolio I've been building throughout the year, and it has been composed of Vanguard Mid-Cap Index funds and Tesla. As you can see, there is also a new entrant, and that is Ark Innovation ETF. ARKK is the ticker symbol. Instead of investing in the mid-cap fund this month, September 1st is when and the first of the month is when I've been investing every month. I've decided to invest in Ark, and I did a video last week. I'll put a link in the video about why I think Ark is a great ETF to look at, and made sense for me to start investing in Ark. This week, the balance should be higher. Tesla definitely shed some recent gains, and that's just the way things go with Tesla. You've got to be ready for the ups and the downs. So here's the portfolio for this week. Moving on, one more thing related to Tesla this week. There was somewhat of a surprise with the S&P 500 not including Tesla in the S&P 500 again, and why this matters I'll just put into round numbers kind of terms. The S&P 500 is composed of the 500 largest US companies. Let's just use a round number of, let's say there's $1 trillion invested in S&P 500 index funds, and there's 500 firms. So let's just do equal weighting for all 500 firms. That would be $2 billion that would be invested in each one of those. It's just for clarity here. So 1 trillion divided by 500 company is $2 billion per firm. So what happens when Tesla is going to get included in the S&P 500, and that will happen at some point? It means that $2 billion at least is going to need to be purchased in Tesla shares. So those index funds are going to make those purchases at some point. It's just a matter of time. This wasn't the week. That may have been why the price got affected. Who knows? Okay, next I wanted to go through the case for Tesla going forward for the next 5 years. And I thought what would be great would be to look back at the last 5 years and say, where have things come from? And you've heard me mention Dave Lee before. He's got a great channel. I'll link to it in the description so you can check it out. One of the things that is fascinating is he's put a lot of his own research in the Tesla forums of the TeslaMotorClubs.com. And here's an index. You can read through these. These were a lot of his impressions of Tesla back in 2013, 2014, and why he was buying. Just a reminder, the share price back then was $7 to $30 in 2013 and increased some in 2014, but really kind of early days for the company. And if you're seeing people post outsized wins today of their portfolio, this is basically when they had to buy in. What I like about this, and what I'd like to use for some of this, is he's got his own model for outsized gains. And what I thought we would have fun with today is use this for Tesla going forward. So the way I'm looking at this is the decision framework. Let's walk through it. Find a growth company or a potential growth company that you believe is going to continue to grow at a fast rate, even in 3 to 5 years. Elon estimates the company is going to grow 40 to 50% for the next 5 to 10 years. And the company has seen 40% year-over-year growth in sales over the last 5 years. So this isn't hard to imagine that the world moves to electric vehicles and Tesla continues to reap that. There's a lot of room to run for an electric vehicle maker. Next, confirm the product is awesome. Their customers are big fans and their management is smart. So a lot packed in here. I'm just going to say check. Yes, Tesla's great product. Customers rave about them and the management is world class. Calculate the company's market cap in 3 to 5 years by projecting profit or potential profit and multiplying it by a conservative multiple. So let's go take a look I think what'd be interesting here is to go back to some of the Ark research on Tesla and see what that shows us. Okay, here is the Ark case for Tesla, and they give it away right at the beginning. They expect Tesla to be worth $7,000 in 2024. With the bear case at $1,500, this is pre-split, so you'd have to divide all these by 5 to get the price today. So $7,000 divided by 5, 1,500 divided by 5, 15,000 in the bull case. So right in the middle, or roughly in the middle of the $7,000 price target. I'll still use the prices they have in here just to make it simpler. Again, if you are looking at the stock price today, just divide by 5. I think this is the most important part of the whole case, and what they have here for the bear case is 3.2 million cars sold in 2024, 7.1 million cars sold in the bull case. So these are tremendous amounts of cars, and really an increase year over year. An average selling price for the bear case of $52,000. That means 166 billion in revenue, no robotaxi, gross margins of 33%, which is pretty high, and EBITDA margin of 17%. Okay, so let's use some of those numbers that they have on there as a starting point. So let's assume 3.2 million vehicles are sold. So this is Cybertrucks, this is cars, this is a semi, this is a big range of vehicles, and there's 3.2 million of them sold. Let's say that's for $166 billion in revenue times 0.17 for earnings of 28 billion, roughly. Now let's take, okay, what can we use as a multiple for Tesla? Let's just, in this case, it's really just an electric car company. It's not a, they haven't made a huge breakthrough on self-driving. They haven't made any more huge breakthroughs on software and this isn't necessarily even including electric business as a possibility. It's just vehicles. So a typical multiple might be 10. So in the auto industry, we would take those earnings times 10, and we'd get a $280 billion market cap. And that's roughly where they're at today. So I think this is a good time to reflect and think, okay, they haven't made 3.2 million vehicles and sold them. That's the difference in the market cap today, is that people are factoring in a lot of growth. There's a lot of growth being factored into this company just by looking at this. And then you can see, okay, if I take some different multiples, maybe they've got some better version of self-driving than every other car company. So they get a higher multiple of a 20 or a 30. You can see the market cap goes up pretty significantly from there. Okay, I told you I'd get back to this idea of 3.2 million sales. So let's take a look at that. Here's a chart of past sales that Ark also has, and I'll link to this. And you can see their sales growing roughly 40% over time. And then I think what's good about this is you can see, okay, what is that going to look like going forward? So 2019, over 400,000 vehicles sold. That's going to jump to over 600,000 in 2020, 2021. You can see 800. So you can see there is a path for them to keep going and increasing their vehicle sales year over year. If you extended this out another year, it's going to fall just slightly short of 3 million. It's going to be about 2.5 million. And I think they've revised some of the market forecast. But you can see at 40% growth rate, this is achievable just on the vehicle side. Okay, moving on. The projected market cap is at least 3 times greater than the current stock price, then buy the stock. So let's apply that to what we just went through. the projected market cap in the bear case, which we've been talking about so far, is not 3 times the value. So in today's dollars, the price of the stock is 2,000. So at 1,500, which was the bear case, it's actually less. So you would not buy the stock. The projected market cap, and we'll go through the median case here and the bull case next, because I think this is where a lot of the rubber hits the road. Okay, so just a reminder, we went through some of the bear case, and that was really just as an electric vehicle manufacturer. And now let's get into some of the bull case of Tesla really has autonomy down. They have a autonomous car company that you can rent out your car during the day, legit, and you can use it to drive you places. It can make you money. It becomes a much more valuable asset to you as the car owner. So let's look at the bull case here. So it's over double the amount of cars and vehicles sold. Average selling price goes down because you've increased the manufacturing so much and you're making money off of the services. You've got more cars sold, but you've got a lot more in revenue from your taxi fleet with a much higher margin, because now you're primarily not just a vehicle builder, but you're also a software manufacturer with a much better margin, and that's going to impact your bottom line. And now instead of a $300 billion company, you're a $3 trillion company. So the share price is, $15,000, and in today's world that'd be about $3,000. So you're going to see a multiple there that makes sense to invest. So a lot of investing going forward in Tesla really has the assumption already baked into it that the electric vehicle side, that the bear case here is going to come true, that it's a certainty, and that you don't really need to worry about it. It's really now a case of how much autonomy can be brought forward. And the way I look at this is compared to what? Who else, if not Tesla, is going to bring autonomy to vehicles? Is there lead enough in the autonomous space to make sense for the bull case here, or the median case, which I'll go back up here, which would say, okay, the bull case, everything goes right. The bear case, they just do what they've been doing. And the median being effectively what we have today is a $2,000 pre-split price per share. So we're actually not that far away from the median today. And really a lot of the decisions I'm making going forward are really around, okay, how much of this upside autonomy is really going to come true in the next 4 or 5 years, and how much to place bets on autonomy not only coming true, but also being a viable business by 2024. So that would mean not just that you get it right, but that it's in other businesses and people's hands. They're using it. It's that safe. So there's quite a big stretch in my mind for the autonomy to be that far along by 2024. But I also think that they will get there faster than any other company. And even if it takes longer than 2024, let's say it takes 2028, 2030, this is the company that's going to get there. Hold on and don't sell unless the company's long-term prospect story changes or the market cap reaches your projected values. So I think this is where, unless the company's story changes and they slip or they start really becoming not the market leaders in research on automotive autonomous vehicles, it's stay the course and keep holding on for dear life. There's going to be a lot of volatility with Tesla over the next 5 years. There's a lot of room here to go, but there's also a tremendous team working. And then step 6 is really enjoy the gains. So if that's, in this case, 300% in the next 5 years, then wonderful. Okay, that's all for this week. Again, this isn't financial advice. This is just how I'm looking at investing in Tesla and innovation going forward. I thought this framework would be a good intro. I don't think it's an ending place. I really think if you're interested, you should read Dave's research, how he thinks of things, and then apply these formulas and these ideas yourself. So this is really just a way I'm looking at things, and hopefully it may help. It's not designed as financial advice, and we'll see you next week.